500 kilometers above the surface of the Earth. Thousands of mass-produced private satellites hurtle through low Earth orbit at 17,500 miles per hour. Where satellite communications were once the exclusive domain of sovereign governments and multi-billion-dollar state space agencies, private megastations now dominate orbital space. Building a private satellite network requires deploying vast constellations of low Earth orbit, or LEO, spacecraft to achieve continuous global network coverage. Unlike traditional geostationary satellites operating at 36,000 kilometers, which suffer from lag-heavy latencies exceeding 500 milliseconds, LEO constellations orbit at just 500 to 1,200 kilometers. At these lower altitudes, latency drops to 20 to 40 milliseconds, matching the performance of terrestrial fiber networks and unlocking real-time data streaming across remote regions. Inside each satellite, advanced phased array antennas dynamically direct electronic beams across land and ocean without physically moving the spacecraft body. To relay data seamlessly across ocean voids where ground stations cannot exist, modern private satellites utilize inter-satellite optical laser links. These subsea-style laser links pass petabytes of encrypted data through space from satellite to satellite at light speed before beaming the signal down to a user terminal on the ground. The financial unit economics of deploying a private satellite constellation depend heavily on launch access, mass manufacturing, and orbital lifecycle replacement. A modern LEO constellation requires deploying anywhere from several hundred to over 10,000 individual satellites to maintain unbroken line-of-sight coverage. Historically, satellite manufacturing costs ran into hundreds of millions of dollars per individual spacecraft built in sterile, custom cleanrooms. Private constellation operators revolutionized this cost structure by introducing automated assembly line manufacturing, driving individual satellite hardware costs below $1 million. However, rocket launch infrastructure represents the single largest capital bottleneck for any private space network. Operators leveraging reusable medium and heavy-lift rockets drastically reduce their cost per kilogram to orbit compared to expendable launch vehicles. A single heavy rocket launch can deploy 40 to 60 LEO satellites simultaneously into precise orbital planes. Total initial capex for a fully operational global constellation ranges from $5 billion to over $20 billion, spanning satellite production, launch manifests, and global ground station integration. Beyond orbital hardware, private satellite networks require extensive terrestrial ground station architecture to route traffic into the global internet backbone. Known as gateway stations, these ground installations feature multi-antenna arrays that track hundreds of fast-moving LEO satellites simultaneously as they cross the local horizon. Gateways must connect directly to high-capacity subsea and terrestrial fiber optic backbones to offload satellite data into cloud data centers. Securing radio frequency spectrum licenses from international regulatory bodies, such as the International Telecommunication Union and the Federal Communications Commission, represents a major hurdle. Operators must bid for and secure high-frequency bands, including Ku, Ka, and V-band spectrum, while engineering dynamic beam steering algorithms to prevent interference with competing constellations. Furthermore, on the customer side, operators manufacture low-cost flat-panel user terminals integrated with beam-forming microchips. Reducing terminal manufacturing costs from thousands of dollars down to a consumer-accessible price point is the critical key to driving global subscriber adoption. To monetize multi-billion-dollar orbital investments, operators target diverse commercial streams across enterprise, consumer, and defense markets. In the consumer space, satellite direct-to-home broadband monetizes rural and underserved populations where laying terrestrial fiber is economically impossible. In enterprise sectors, private networks deliver mission-critical connectivity to offshore oil platforms, maritime shipping fleets, transoceanic commercial airlines, and remote mining operations. The fastest-growing revenue model is direct-to-cell technology, where satellites function as floating cell towers in space, delivering emergency text and voice connectivity directly to standard unmodified smartphones. Additionally, defense agencies and sovereign militaries represent high-margin anchor clients for private satellite networks. Military buyers purchase dedicated private satellite overlays, featuring military-grade encryption, anti-jamming frequency agility, and tactical edge computing, to manage autonomous systems and battlefield intelligence in real time. Despite booming commercial demand, private satellite networks face extreme, long-term operational challenges, led by orbital decay and space debris management. Atmospheric drag in low Earth orbit continuously pulls satellites toward Earth, forcing spacecraft to use onboard electric Hall thrusters to maintain operational altitudes. Because satellite propellant depletes over time, LEO satellites have an operational lifespan of only 5 to 7 years. This creates a continuous replacement cycle where operators must launch hundreds of replacement satellites every year simply to sustain their existing network capacity. Furthermore, the risk of orbital collisions, known as the Kessler syndrome, demands autonomous collision avoidance systems driven by real-time orbital tracking radar data. When a satellite reaches end of life, automated systems deorbit the spacecraft into Earth's atmosphere to burn up harmlessly and clear the orbital shell for incoming generations. As lower launch costs accelerate space industrialization, control over private satellite infrastructure dictates who dominates global data transmission, autonomous logistics, and orbital intelligence.